Here we are on the Euro New Zealand 15-minute time frame, and we have a lovely looking wedge pattern that has set up. And if I just zoom in a little bit, you'll actually be able to see quite clearly here, if I just remove the orders, that we have had 2 touches either side, 3 on the top actually. We may be coming down for a third test here, and what I've done is I've managed to get my stop at 12 pips below the low. Typically my standard rule on this currency pair and this time frame is just generally on this time frame and the size of this trade would be 10 pips. However, the Euro New Zealand is a little bit more unpredictable, and I always add an extra 2 pips on there. I do the same thing with the pound Aussie as well, because it's a little bit more unpredictable. You need a little bit more for the spread, particularly at night as well. So I've gone 12 pips below this swing low. And if we bring this down, I've gone for a 127 fib extension as the targets. So if I bring these back on, this is how it looks. So you can see we have a very nice looking risk to reward here. So I'm just going to make that red. And I'm going to make this one green. Now, if any of you have watched the trade I took last week on the Euro New Zealand, I was in a flag pattern and I was a bit concerned that we wasn't going to get the full breakout, and I would have been stopped out if I hadn't have moved to break even. Since then though, what we have done is we actually have broken out to the upside, and my bias has now changed. I am looking at this market going higher. So if I just remove these VS1 levels, and the flag pattern was I'm not too sure, but anyway, what we've done here is we made a higher low. Well, we actually did come down to double bottom here, and then we broke to the upside, and we have had quite a momentum move here on this hourly candle and on the 15-minute as well. So with that momentum move and this wedge pattern that's formed, we've just broken past the 17700 flat. We have actually closed above that, and so if I put a structure level on for the 127 fib, we can actually go a little higher here. However, I am only in this instance going to be playing for that 127 fib. So let's work out exactly what the risk is and what the reward is on this type of pattern. Bring these orders back in, and we are looking at stop doing that. What are you doing? Okay, we are looking at a risk here of 28 pips. Oof, the Euro New Zealand does have a big ATR. And we are looking at 60 pips for targets. Sorry guys, I'm just checking something. Okay, I'm back. Sorry about that. I wasn't happy with where I placed my stops, and what I've just done is I have increased the risk on this trade by 12 additional pips. Now, you may be thinking, why on earth have you done that? You had a really good risk to reward. And throughout the ridiculous amount of backtesting that I've done on these patterns, and my personality, I prefer to have a far higher win rate than a fantastic risk to reward. And what I found is that when we have these momentum moves, it's always best that the pattern comes down into structure. Now if you look here, we have this major level of structure right here, and my stop was above it, and I cannot tell you the number of times that the market will come down and literally just tap the closes of the candles. Okay, just enter the wick and just tap the closes of the candles, and then instantly reverse to go and hit your targets. Now I have just put on a fib on. As well, should I say? And here it is, and we have the 382 fib right there, and then just below it is the structure level here. So I like to look at every trade and risk the appropriate amount based on the trade's merits. So in this instance, risking 40 pips for 60 is a 1 to a 1.5 risk to reward. I am very happy with that. I had a better risk to reward. I had almost a 2-to-1. In fact, I had over a 2-to-1 risk to reward when my stop was up here. But based on my back testing and my personality, it is better for me to have a higher win rate. And I know very often when this happens, when the pattern doesn't come into structure, that my stop being under there makes for a far higher win rate overall on these patterns. So I'm happier to risk those 40 pips instead of 28. Whether I'm right, I have no idea. It's now 9 o'clock. I guess I'll find out tomorrow in the morning. This would be an awesome one if we came down to there, stopped and instantly reversed and hits targets. I actually don't want it to. I don't want to go nearly 40 pips in arrears. I just obviously want this thing to rally up there and hit targets. But this is the situation we're in. I have trained for this situation. I know that this happens an awful lot, and you know, I only spotted it really when I've come to do this video. I like to check twice, execute once. I just missed it, but that's the good thing about doing these videos. I get to go over it again and just double check I've done everything exactly as I should have done. Just a little update on this trade. Time now is almost 20 past 7 in the morning, and this happens quite frequently. The wedge pattern has turned into a high and tight flag, and so what I've now been able to do is, because this is now a confirmed high and tight flag, and just let me change the colours in these so you can see them clearly. It means that we've had multiple tests either side, we've held the trend line, we haven't violated it. It means that I can take some of the risk off the table. And so you can see here now, we have tested quite a few times either side. 3 tests of this trend line on the bottom we've had. Why is that one not going on? There we go. And so what I've done now is I've reduced the risk. There was no need now to have the full 40 pips of risk on here. So what I've done now is the risk on this trade is, that's not right. There we go. 32, so I managed to remove 8 pips. The very lows of these wicks is 74, so I'm 14 pips below those, just in case we have a large spike that comes down. Almost a 2-to-1 risk to reward now on this trade, and it would be nice to see this come back up to this trend line here, and obviously then violate it. The only problem, and it's not really a problem because the trade is still valid, it's just that technically we don't have a breakout until we break above this big spike here. So this will just be a trade that I'll have to wait and get that breakout, and then I can look at reducing the risk once we've violated those highs. And a little update on this trade. You can see now we have rallied into profit. We came down for another test down here, and as you can see, that's held very nicely. And it does look as though we're breaking out now, but like I said, really I can't move my stops until we breach these highs here, and even then I'll only be reducing down the risk on this particular trade. I don't actually have the amount of risk on here. Okay, so looking at about 28 for 59. Yeah, I'm taking profits before that 127. Okay, well, there we go. We'll come back and see a little bit closer to targets, hopefully. And we're back for the final part of the video, and we had major news out at 2 in the morning, which I was aware of. Unfortunately, it stopped me out. So as you can see here, the market came down. I was actually stopped out for 27 pips after checking this morning, not 28. So that is a losing trade. What a shame. We tried to break through 1, 2, 3, 4 times. As you can see, we never actually made a new high there. And it was just a very good battle that went on. Unfortunately, this time we lost. So minus 27 pips on the Euro New Zealand.